Hello, hello. It's your boy, Adrian Silva, the Ace of Real Estate, checking in with an update on El Paso TX Real Estate, El Paso, Texas Real Estate. Wanted to touch base on this article that I posted a few days ago, Friday, I believe. Today is Sunday, July 7th, and it was about New York, Manhattan. It is now a buyer's market. And somebody asked me basically how things were in El Paso. So I wanted to educate my people, let you all know where we are at this time, July 2024. And let's go ahead and dive in. So I'm going to zoom out and show you guys a macro point of view, which is the United States. We're zooming out to the big picture, looking at what's going on in the US. And then we're going to zoom in micro level and show you how we're looking in El Paso, Texas. Cool. So let's start with the article, right? Let's see here. CNBC, Manhattan is now a buyer's market. It's a good and a bad headline, right? It's a bad headline for sellers. It's a great headline for buyers. More options for buyers. Real estate prices going down, inventory going up. So that's definitely what buyers want to hear, not what sellers want to hear. And what I'm seeing here is that Manhattan, New York, obviously one of the priciest markets in the United States, probably in the world. But this is what matters right here. Let's go ahead and zoom in. Here we go. Bam. This paragraph right here, pay attention. Any number over 6 months of supply tell us there is too much supply and we are in a buyer's market. Manhattan, New York has 9.8 months of supply, meaning it would take 9.8 months to sell all of the apartments on the market without any new listings. So assuming that they don't put any new listings, that's how long it's going to take just to sell what's already on the market. And like I said, any number over 6 months is a buyer's market. If it's 6 months, then that's a 50-50 balance market. And if it's below 6 months, that means we are in a seller's market. Now, let's zoom out. We know what's going on in New York. What's going on in the United States? So right now in the United States, there are 787,000 homes for sale, which is down from the time that the Federal Reserve of St. Louis started tracking it. You can see here, they started tracking it July 2016. And at the time, there were 1.4 million homes actively for sale. It's been kind of downtrending, right, throughout the years, going through its ebbs and flows. But then we see this gray line, right? What does the gray line mean? Recession. What happened March 2020? We dipped below 1 million. Why? Because of COVID, coronavirus. Scary times, right? People were freaking out. They took off their listings from the market. A lot of buyers decided to stay put. A lot of sellers decided to stay put, refinance. Rates went down. So yeah, we saw a huge decrease in inventory throughout the United States. And as interest rates kept going down, we saw an all-time low nationwide of 346,000 listings. So yeah, it's like a third of what it was 2017, 2016. Now we're uptrending, right? So it's been uptrending since like April 2022, May 2022, right? And this is correlated to what happened with the interest rates, right? So I'm not gonna do a whole lesson on interest rates, but I'm just gonna show you here. This was COVID. Interest rates went down from 3.4 all the way down to November 2020, 2.68% on the interest rate, right? That was like the bottom of the rates. But then, right, what happened right here? January 2022, rates started going up. back to threes. Over here, we broke a trend line, 4.5 right here. Bam. We broke this trend line, right? Because we were on a downtrend, going down, bam. And it went all the way up. This was, let's see here, June 2022. Right there, we were at a key level, 5.68% interest rate. And then we broke that trend line, bounced on that, and that's what, 7%, which was, when was this? October 2022. Very correlated to the inventory situation, right? You start to see inventory go up significantly after interest rates started going up. Bam. Little ebbs and flows, but still an uptrend. This is the same chart that we're seeing in right here, the Federal Reserve. So 787 should match what this is saying. Yeah, 787,000 units for sale. Now this is what's pretty interesting. I love Fibonacci indicators. And what I did was I used the Fibonacci retracement tool. I grabbed it from the all-time high in June 2016. And I don't want to say all-time high because we probably had more inventory before June 2016, probably in 08, 07. I need to look at that data, but this only goes back to 2016. So in 2016, we had 1.4 million. So I grabbed the Fibonacci retracement tool, bring it all the way down to the all-time low, which was February 2022, right before rates started going back up. And what do we see here? Look at this. I love Fibonacci because it has a lot of correlation with nature. It's found in plants, humans. I look at it as God's code. And it has specific numbers, 786, 618, 0.5, 382. All you gotta know is those are Fibonacci numbers. And stocks, crypto, and even real estate reacts to those numbers. You can see here, inventory bounce on the 618, right? When above the 786, didn't hold, didn't hold at all, got rejected again, bam, broke the 618. Kind of bounced on the 0.5 a little bit, but it didn't hold either. 382, broke down straight through it. And this was when, July 2020. So inventory was just going down. Like, rates were going down. So this was just going all the way down. Sellers did not want to list because they could just refinance, get a lower monthly payment, or pull out money from their equity, fix their homes up, or they were just concerned with COVID, right? So they just weren't putting the homes on the market. And not only that, but there was a lot of buyers on the market. So they were taking advantage of the low interest rates. So the buyers were lining up outside of properties, and they were just snatching up the inventory. So what's important here is how it reacts to those levels, right? We see the perfect bounce on the 786, trying to hold the 786, bouncing on the 0.5 slightly. And here, now we were trying to hold the 236 number right here, bam. But now we're breaking past this level, 382. We're past it. We're above this green line. And the last time we were there was right here, July 2020. So right now, inventory in the United States is in July 2020 levels. Inventory is going back up. Now, July 2020 was pandemic time, so if we go pre-pandemic, this would be around here, around 900,000 listings. So once we hit that number, that's going to be basically where we were before the COVID pandemic. Now we know what's going on across the United States on a macro level. We know that inventory is going up. It is very correlated to the interest rates. Interest rates have been going up since January 2022 due to inflation. And yeah, right now we're still kind of bouncing in the sevens, the high sixes as of right now. That's where we are. So unless we break this trend line and go down, that'd be great for buyers. We might see less inventory, but if we keep going up on the interest rates, I think we're going to continue to see more and more inventory due to affordability. So anyways, let's go to El Paso because that's what matters. We are in El Paso. I'm in El Paso. A lot of you guys are in El Paso. So let's see what's going on. El Paso, Texas. So this chart goes to 2015, January 2015. At that time, we had 4,097 homes for sale. The all-time high since 2016 was 4,441 units for sale, active. And then we were, I guess, on an uptrend there, and then we started seeing downtrend. Bam, 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 bam. 2019, rates were going down still. Market was great, economy was booming. And then COVID came right here, March 2020. El Paso inventory was at about 3,013 active inventory homes for sale. And then bam, we dropped again because of COVID, hit an all-time low of 1,489, actually 1,480 homes for sale. Look at that, April 2022. That was our all-time low, and then we started seeing an uptrend. Why is that? Well, again, it's super correlated to interest rates. So if we look at April 2022, we were right here. We had broke this trend line and interest rates were back at 4.96, basically 5%. So that definitely, I guess, affected a lot of the buying power in El Paso, and homes started sitting on the market longer. Therefore, we had an increase in inventory. So that's following the trend. April 22. This is the interest rate chart. We went up 5%, all the way up to 7, almost 8%. Back to El Paso chart. April 2022. Now we're on an uptrend. Bam. As of right now, we are sitting at 2,459 units for sale. Now it's pretty much almost half of what it was at the all-time high of 2016. It's actually above half, because half of 2,441 is like 2,200 and some change. We're at 2,400, so we're slightly above half of the inventory, but still below pre-pandemic inventory over here, and we're approaching that pretty soon though. And in terms of like months of supply, we call that the absorption rate. Oops, you guys see that? Cool. So the absorption rate in El Paso as of right now stands at 3.96 months. So let's call it 4 months. So right now, if El Paso sellers stop listing their homes on the market, it would take 4 months to sell all current active listings, right? So definitely different than New York. New York has 9.8 months of supply. El Paso has 4 months, a little under 4 months actually. Therefore, El Paso is still a seller's market. Once we hit 6 months, will be a balanced market. As of right now, slightly a seller's market. Days on market is up though, so homes are still not selling in days like we were during the crazy times of low interest rates, COVID. But at least we see that we're still not in a buyer's market. I mean, it's a good and bad thing, right? If you are a buyer right now in El Paso, you could still take advantage of the fact that it's not as hot as it was back in 2021, 2020. So you may be able to get your closing costs paid, more than likely. if the seller is motivated enough to sell their home, and maybe if they have the equity to give you their closing costs assistance. Some sellers, if they price their home right, if it's a desirable area, desirable type of property, and it's in great condition, remodeled, there's a chance that you can still see multiple offers and get away with not paying closing costs. But if you are a seller that, maybe does need to do some touch-ups on the home, there's some wear and tear, and if you're pricing your home above market, then yeah, you're probably gonna sit on the market, at least a month, maybe two. Let's see what the average days on market is here. So right now we're averaging 25 days on market, which is up 31%, and yeah, compared to the all-time low, 7 days was our average in El Paso, June 2021. So yeah, look at this, 8 days. What happened again? May 2022, rates started going up. So we went from 8 days median to what it is right now, 25. So sellers, keep that in mind. It is taking longer to go under contract. 25 days, so that's a month. Prepare for at least a month of between when a property is listed to the contract day. So just to go under contract, on average, is taking 25 days. And look at this, pre-pandemic, 2016, it was 76 days. Sorry. So yeah, I remember at one time 90 days was normal. 2019, let's see here, let's see what happened 2020. Here we go. So March 2020, we were at an average of 24 days on the market, which is where we are now actually. So we're back at slightly pre-pandemic levels. After the pandemic is when when rates went down, median days on market went down, but we are pretty much back at pre-pandemic levels, 24, 27 days regarding days on market, not inventory. So yeah, if you have any questions, let me know, hit me up. You can also go to my website, pasotx.realestate. I have a market trends button there, so you can pretty much get an idea what's going on in El Paso. You can see the median sales price, median days on market, percentage of homes sold above list price. That's been going down, so less homes have been selling above list price. And then what's pretty cool about this tool too is that you can see where buyers are coming from. So for example, people are moving out of LA, Houston, Seattle, San Diego, San Francisco as the top 5 cities that are of buyers migrating to El Paso. Pretty interesting data right there. But anyways, if you have any questions, you know who to reach. Adrian Silva, the Ace of Real Estate, checking out. Peace. Thanks for watching.